what is deemed as bread and butter setups. Basically, it forms every day, but you just have to understand which low or which high is going to be taken, and that will come with understanding the high time frame, which mostly you've got that with me when we are bullish. So when you are bullish and price is going up, they're always going to go for previous day's highs, because once we form a high, price usually pulls back and close for the day. So next day price goes down and then comes back up and take out this high. So when you're bullish, it's always taking out previous day's high. Let me use DXY as an example. So for example, notice from here, this is a previous day's high. Next day we open, it goes down and then it takes out this high. Same thing, that high is taken. Next day it goes down, takes out that high. So when you are bullish, it keeps taking previous day's high, and then when you are bearish, previous day's low keeps taking or keeps getting taken. But look at the condition that we are in right now. Notice that it goes above this high and then rejects inside the lower time frame. Let's go back to the high here. Right, that's the previous day's high. It gets run there. So this candle, this big down candle, rallying above that high, once that is broken, that's basically a trend change. So any pullback you can use to go short. Okay, so once we close below this candle, this down candle, any pullback you can short it, right? And then this becomes your next high, this becomes your next low, and then previous day, the second day or the day after, price didn't run none of them. But notice here, let me zoom in, you can see that was the high right there. Actually they did run it here, so you're gonna sell short there. Obviously don't trade the DXY, I'm just using it as an example. Okay, so you're always looking at previous days highs and lows as your where price is gonna form a trade idea for you. And that's the previous day's low, and previous day's low here that got run, another previous day's low there that got run, and this is another previous day's high that got run here and then broke down, and then finally what we currently have is this high, which is Thursday's high, that high, which is Friday's high, and then we have Friday's low. So going forward, these are the targets that price is going to run, and as soon as they are run, it's going to reject because we don't have a trend yet, so it's going to reject, right? So as soon as it runs it and rejects, that's your clue that this pair is willing to do a rally, or as soon as we run and it breaks down, this pair is willing to drop. This morning again, euro yen did the same thing. It did run Friday's low here with that, and then rejected, pull back, rally. Okay. What other pair? Let's go on to all the other pairs. I think New Zealand yen also did the same thing. Yeah, New Zealand yen also did the same thing. Run the low, reject, pull back, and then rally. Okay, so that's the framework. It's very simple. Just don't complicate it. Look for if you can't find the lows, just go onto your daily time frame. Okay, go into your daily time frame. It will be there. This is your high, that is your low. So today, currently, that is your low and that is your high. If you drop down to the lower time frames, with the help of the daily dividers, they will be there. So that's the low, that's the high, that's the low, and that's the high so far. Okay, so at some point tomorrow, one of these is going to be run. This one has already been run. So if they leave this high as today's low, tomorrow they will run this one and maybe drop back down. Okay, so you want to watch the 45 minutes. You want to watch the down candle prior to price running the high. So let's say they run Friday's high. You want to watch the down candle prior to that, and then as soon as we break back down, you can look for a sell. Or what you can do is use the understanding of the candlesticks that I've been pointing it to you guys. As soon as you see a swing high formed, okay, as soon as you see a swing high formed after price has run the high, that's your clue. What time frame? 1 hour, in my opinion, will be best. Okay, so as soon as we run, because that's what I used on Swiss yen. So if I go back to Swiss yen, so I saw this. Now I'm showing you that because it's the same thing. It's just a matter of changing perspective. This is what I saw. I saw a swing low form after it ran previous day's low with this big candle. So the one I show you in the lower time frame is the same thing as this on the higher time frame. It's just a matter of perspective. So by looking at it on the hourly, it's a swing low. By looking at it on the 15 minutes, it's a breaking structure here.